Hello ladies and gentlemen, welcome back to the channel. In today's video we're going to be covering my favorite stock in the stock market, which is the Walt Disney Company, ticker symbol DIS, and why they are currently on the rise. But before we get into that, just again I want to say thank you for letting this channel reach 250 subscribers. Thank you to everyone who subscribed and liked the videos and commented and shared and done all those things. If you aren't subscribed, go ahead and join the team now as we continue climbing to 1,000 subscribers. And we're going to continue putting out great content for you guys, and hopefully we can all learn along the way together. So, and if at any point during this video you do hear something that you like, or you do enjoy, or you learn something during this video, go ahead and hit the like button as well. And then let's just get right into it. So as you guys see, Walt Disney Company is currently sitting at $128, and they were up around $131 earlier today, and even in opening hours I believe they were up like $6 after hours. As you guys see, around 3% today. And what's been driving this? Well, the big thing is they came out and said Disney says its primary focus for entertainment is streaming, announces a major reorganization. And I think that's a very smart thing. As much as I don't want to believe that movie theaters are dead, and I don't think they are, because they have kind of come back a little bit, but it's going to be very rough for them to recover to where they once were. And whether that will happen, I think that's a video for a different time. I think focusing on streaming is a good thing for Disney. And you think of Disney Plus, but they also have Hulu. They're a full owner of Hulu. And then they also have ESPN Plus, which is like, I guess technically the ugly stepchild of the three. Not a lot of people use ESPN Plus, and if you do, let me know if you like it in the comment section below. I personally do not have much experience with it, so we'll get right into this article. Disney is restructuring its media and entertainment divisions in order to further accelerate its direct-to-consumer strategy. The company will be centralizing its media business into a single organization that will be responsible for content distribution, ad sales, and Disney Plus. And the whole rise of Disney Plus is really to credit Bob Iger. This was one of his biggest accomplishments as CEO, and as we know, Bob Chapek is now the current CEO, as Bob Iger stepped down, but he is still helping navigate through the current virus situation we're in. The change comes as the global coronavirus pandemic has crippled its theatrical business and ushered more customers towards its streaming options, and the numbers on Disney Plus have absolutely skyrocketed. On Monday, the company revealed that in order to further accelerate, so we kind of already read that, shares of the company jumped more than 5% during after-hour tradings following the announcements. The move by Disney comes as the global, as of August, Disney has paid 100 million paid subscribers across its streaming offerings, more than half of whom are Disney subscribers, or are subscribers to Disney Plus. That's a massive number. Now, granted, they have three different services, and I don't know because I know they offer deals with like Hulu, Disney Plus, and then ESPN Plus. I don't know if each one of those is counted as a subscriber, even though it's the same person across the board. I assume they're counting all three of those, but I could be wrong. I would not characterize it as a response to COVID. It's probably a response to COVID, let's be honest. CEO Bob Chapek told CNBC on closing bell, I would say COVID accelerated the rate at which we made this transition. Okay, I would definitely agree with this, but this transition was going to happen anyways. Obviously, COVID has accelerated everything across the board, whether it's jobs going online, people working from home, school being online, the rise of Zoom, the rise of streaming even more. We see all these different things. We are tilting the scale pretty dramatically towards streaming, Chapek said on closing bell, noting that the company is looking at all investments, including dividends, as it seeks to increase its spend on new content. So what this likely means is they used to pay a dividend, and I guess they might still. It says they have a dividend, but I don't think they do, and I think people are calling for them to cancel the dividend. And they pay semi-annually on their dividend, so usually it's right around 80 cents per share that you own. People are calling for them to cancel it and then just reinvest that money into the company and get a little bit more growth out of it, which I don't know, it would hurt them in the short term, but I think in the long term in terms of stock price, it would help. Chapek said the board of directors will have the final say on Disney's dividend payouts. That'll be something I'm very interested in seeing. Only last week, activist investor Dan Loeb called on Chapek to end the company's annual $3 billion dividend to divert more capital to Disney Plus content, which is exactly what I just said. And like I said, I think the dividend's going to be canceled. So don't be counting on that. Is one of Disney's largest shareholders and bought more shares earlier this year in support of Disney's repositioning around Disney Plus, its flagship subscription service. We are pleased to see that Disney is focusing on the opportunity that makes us such enthusiastic shareholders, investing heavily in the DTC business, positioning Disney to thrive in the next era of entertainment. Bob Chapek said the reorganization could result in some reduction of staff, which again really stinks, and that comes after seeing 28,000 workers let go. Became clear its Disneyland parks in California would not be reopening soon. So that you hate to see that. I feel for every single person who was involved with this, and obviously for their families as well. But that's just part of business at the end of the day. As part of the reorganization, Disney has promoted Kareem Daniel, the former president of Consumer Products, Games, and Publishing. He will now oversee the new media and entertainment distribution. He'll be in charge of making sure streaming becomes profitable as the company continues to invest heavily in its various streaming products. Daniel will hold the reins to all company streaming services and domestic television networks, whether that's Disney Channel or ESPN or ABC, including all content distribution, sales, and advertising. That's a lot of power in this guy's hands. I don't know much about him, but hopefully he does a good job. Disney is becoming more reliant on Disney Plus as movie theaters have been unable to recover after shuttering in March due to the outbreak. Ticket sales have been particularly lackluster as domestic cinemas since the industry attempted a large-scale reopening in late August. So obviously you're not going to see some of these things come to theaters or ever return to the prosperity that they once had. The company pushed back to a number of theatrical releases, including its Marvel blockbuster Black Widow. The much-anticipated Pixar movie Soul has all been postponed. It will now arrive on Disney Plus in December. Analysts still awaited word for Disney Plus, are still awaiting word for Disney Plus about how Mulan fared after Disney removed it from all theatrical releases and sold it through Disney Plus for $30. It is expected the company will share more details about its performance during its next earnings report in November. And I don't know. I know the movie itself, from the things I heard, I haven't seen the movie itself, but I've heard not great things. But I think in times like these, people have been willing, and I think the numbers will be good. But, if they keep putting out these duds of movies and just kind of rebrand these things and reskin it a little bit, then I don't think, they're going to be very successful on this platform. They got to start making good movies again and taking time to understand what the people of Disney want. And another big thing, that's pretty much it for the article. Another big thing is Disney World seems to be doing well. There's more and more people are showing up to the parks. They're doing well of distancing. They're doing well of wearing masks. They're doing well of doing all these things. I've seen several videos of it, and they seem to be doing a really good job on that. So I think potentially Disney's going to do a good job of navigating through this. Obviously, California is in a little bit more rough shape, but hopefully they can keep Disney World open. Hopefully, because that's a massive part of the revenue that they earn. So they need to keep that open, and hopefully Disney Plus becomes very successful. At this point in time, do I think Disney is a buy? I would say yes, but again, I'm not an advisor. Take my word with a grain of salt. This is just my personal opinion. I think 128 is a pretty good buy-in point. Now, that comes from someone who bought in around $82 a share back in March just because I love the company. And, I guess we should check out the investor sentiment on a company. I think it's decent. When I invest through Schwab, their rating on it is a D rating, which obviously you don't like to see. Yeah, 5 strong buy, 10 buy, 12 hold. And so it's currently right around the buy. And And I think that average is pretty fair. But in the long run, is Disney going to sit around 130 forever? No, it's not. It's going to rise beyond 130. So I think it is a buy, as long as you're planning on holding it for the long run, and not expecting there to be a dividend, being the main reason you're invested in something like this. So I really appreciate you guys for watching this video. Let me know in the comment section below, like I said, if you are subscribed to any of these services, whether it's Disney Plus, ESPN Plus, or Hulu, whether you enjoy them, whether you guys think Disney's heading higher, whether you think it's heading lower. Like I said, in my personal opinion, I think it's heading higher, and this is by far my favorite stock in the stock market. So we'll see where it heads. Hopefully you guys do well in whatever stock you're currently invested in. And if you haven't already, go ahead and smash the like button and subscribe to the channel as we continue our climb to 1,000 subscribers. And until next time, happy investing.